Hey everyone, welcome back to Corporate Decoder, the place where we make sense of those confusing company reports so you don't have to. Today we're diving into Energy Focus's annual report. And let me tell you, it's a bit of a roller coaster. Are they about to pull off a miracle turnaround, or is this the beginning of the end? Let's find out. Energy Focus, they are trying to be the leader in energy efficient lighting, making things brighter while saving money. But the numbers paint a picture of ongoing struggles, even with some efforts to turn things around. This report is for the year that ended on the very last day of 2024. And what do we find? Well, the auditors are saying there's substantial doubt about Energy Focus's ability to keep going as a business. That means there's some question to whether they can actually continue to operate. Not exactly the words you want to see. A big problem, money or lack thereof. The report states they need more financing to keep the lights on, but getting that money might be difficult or come with strings attached that aren't so great. If they can't find the cash, they might have to scale back their plans, which could really hurt the business. The company's accounting firm is waving a big red flag. Their opinion says our losses and negative cash flow makes a lot of uncertainty on whether they can actually keep the company going. This means investors could lose their money. Let's get into the actual numbers. Total net sales, the amount the company actually sold, came in at $4.9 million. Compare that to the almost $6 million they had the year before. A drop of about 15%. Ouch. They are blaming this on lower demand in the military market and some problems with their commercial sales. Looking at different segments, both commercial and military sales were down. Commercial took a 13% hit, while the military maritime market, or dropped 16%. Basically, fewer people bought their lights no matter who they were trying to sell to. But here is some good news. Their gross profit actually went up. They're reporting almost $700,000, that is 14% of their sales. This is compared to $223, means they're actually making more money for each product they sell. A big reason is they lowered some expenses and sold inventory and did some reserve changes. They managed their product costs a little better. Now, operating expenses, which is what it costs to run the business, are also down. For product development, they spent about $500,000. That was $100,000 less than the previous year due to reduction in the total number of employees. Selling, general and administrative expenses also went down a lot. They went from $6 million to just over $2 million because they have less people. Interest expenses, which is what they pay on their debts, went way down, only $5,000 compared to the $380,000 from the previous year. A great sign, they paid off their high interest debt. Because they got rid of some debt, they actually had a gain of almost $200,000. This also helped them to show some gains in the partial termination of a lease. Unfortunately, despite all that, they still ended up with a net loss of about $1.6 million. It's better than the $4.3 million loss they had the year before, but a loss is still a loss. Looking at their balance sheets, the snapshot of what they own and owe, they had only about $600,000 in cash. A year prior, it was $2 million, so we see that going down. Their cash flow, which tells us where the money is going, they used almost $1.3 million in operating activities, basically running their day-to-day. They are burning through cash, although they are reporting slightly better numbers than the past years. The only thing that kept them afloat, selling more stock, that brought in about $850,000, but it also dilutes the value of existing shares. So what's their plan to get out of this mess? Three main things: a demand-oriented approach by knowing more about their customers, a supply-oriented approach by being more sustainable and reducing waste, and a financial-oriented approach by managing their assets. But their biggest customers are a risk. Two of them account for a third of their sales. If they lost one of those big buyers, it would hurt a lot. And they depend on just a few suppliers for materials, and if those suppliers have problems, Energy Focus does too. And here is an important risk to consider because the company is so reliant on its computer networks, any kind of cyber attack or security problem could really mess up their operations. Doing business outside the US comes with its own set of problems. They are trying to sell internationally, which can potentially affect their revenue. This includes things like different rules, tariffs, and political instability. And as a result of past losses, they have a bunch of tax benefits they can use in the future. Tax assets. However, they might not be able to use all of them because of tax rules, so that could be a problem too. A scary section is if they can't keep up with NASDAQ requirements, they could get kicked off the stock exchange, which in turn can drive the stock down significantly. Alright, shifting gears, let's quickly talk about internal controls. The company does have some checks and balances. The audit committee is in charge of making sure everything's on the up and up with cybersecurity, and management is supposed to report quarterly on those risks. They are definitely aware of the risks. There's one more thing that's worth flagging. Our Chief Executive Officer currently serves as our Principal Financial Officer, which may impact our internal controls and increase risks related to financial reporting. This is never a good practice. And just like any other company, they could be sued. Lawsuits are always a risk, and they can cost a lot of money to defend caned. So putting it all together, what's the verdict on Energy Focus? They're clearly trying to turn things around by slashing costs and finding new markets. Their ability to actually implement new plans while still managing to operate is concerning. They have some new energy solutions coming. We will have to see whether they actually end up performing, but it's a highly competitive market. So I think in general, things are still uncertain for Energy Focus, and it might be wise to proceed with caution. Thanks for watching Corporate Decoder. If you found this video informative, give it a like and please subscribe so we can find new ways to decode those confusing corporate reports. Let me know in the comments below what company you want me to cover in the next video.